Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're going to do another mortgage rate update. Let's see where the mortgage rates are as of 8/15/2022. And then a big question we always get asked is, Omar, when is the home prices going to start dropping? When is real estate going to drop? Is there going to be a crash, or is this going to be a correction? Now the key thing is to understand what the difference between a crash and a correction is. Now crash is anything over 20% in home sale prices decline. And then a correction is anything under 10% that is prices decline. So is it going to be based off of pre-pandemic levels, or is it going to be based off of current levels? Now that's going to be in the course of a year, and you know, it's hard to analyze this, to be honest with you, because the real estate market, it's been unheard of the way that it's been going in the past 2 years. In the past 2 years, it's just been absolute just lunacy when it comes to home prices increasing so much and this overbidding and everything like that. And for the first time ever, hedge funds are getting into the game of real estate and purchasing properties. That is a bit of a downfall because they tend to hold a lot longer. Now, will they? If home prices start declining, will they start to get a little bit freaked out because they're like, oh my God, you know, our balance sheet is just going completely nuts. We have to get rid of this, because then their portfolio is just not going to look as good. Even though it is rental income producing, their total assets on their book is going to look like it's dropped dramatically because those homes are not appraising for the same amount, which devalues the company as a whole. But let's get on with the mortgage rate update. We're going to be pricing out 10 different mortgaging products. As of 8/15/2022, 30-year fix will be sitting at 4.49%. 15-year fix will be sitting at 3.62%. 30-year high balance is going to be sitting at 4.84%. DSCR loan, which is a debt service covered ratio. This is a loan product for investors that want to go ahead and use an income producing property as rental, the rental income, to go ahead and qualify you based off of just the income coming in off of that. And then opposed to that will be the debt. So that's why it's called a DSCR, a debt service covered ratio loan. So for instance, if you had $1,000 total in rental income coming in versus $1,000 principal, interest, tax, insurance going out, that'll be a 1-to-1 ratio, which we typically do not like to see, a 1-to-1 ratio. Anything above a 1.15 and above is usually where we'd like to stay at, which kind of begs the differ, like, you know, how small the margins are whenever you're coming to the rental side of things. So whenever people think that, oh, you know, you're this real estate guy and you have 15-20 homes, you're doing great. No, the rental margins on majority of income producing properties are not as big as most people think that they are. So bank statement loan will be sitting at 7.55%. That is going to be income based off of what's coming in, total deposits going to your bank statement versus the total debits that you have leaving it, and then we go ahead and do a ratio based off of that. That'll be sitting at 7.55%. That is one of those non-agency, non-qualified mortgage products. FHA 30-year fix will be sitting at 3.82%. 7/6 adjustable rate mortgage will be sitting at 4.70%. USDA 30-year fixed will be sitting at 3.85%. VA 30-year fix will be sitting at 3.89%. Hard money fix and flips will be sitting at 9.25%. Now that's for people who want to go ahead and do it. It's a short-term loan. Typically it's a short-term loan. Not all of them are short-term loans, but it's a short-term loan for you to go ahead and get some capital, purchase a property, go ahead and fix it up, rehab it, and then go ahead and sell it for a profit. So that's going to be our mortgage rate update. And if you are interested in any one of those mortgage products and more, link in the description below. And for up to 50% commission rebate, 0% listing on selling your home, link in the description below. But the biggest question, of course, we always get is, hey, are home prices going to go ahead and go down? And like I just stated, you know, there is a big difference between correction and crash. Now the hard part about this is trying to understand, hey, is this going to be a crash based off of pre-pandemic levels or post-pandemic levels? Because let's just face it, the last 2 years is unheard of how much homes have inflated and appreciated in value so much. And at the same time, they're kind of slightly declining as well too. So we look at a majority of all different countries. We look at, you know, first primarily I look in the California market, then I look in the United States, then I look at Canada, then I look at China. Now, these are the mostly densely populated areas. You have to look at who has the highest, you know, as far as total economic production that has coming in. You know, China is one of the big ones that are super heavily populated. Their real estate market and some of the places like in Hong Kong, Shanghai, all those, they're very, very densely populated. So, but we're going to look at is California. Now in California, we have started seeing a decline. Like even just as of May 2022. In May 2022, just a few months ago, home prices on single-family homes were running around 900,000, has dropped in June to 863,000. Now these numbers go based off of quarters. That's why it's the numbers are out in June. But the year-to-date sales on single-family homes have dropped by 20.9%. Condos have dropped 27%. 27% is huge. Now that's mainly because majority of people hate the HOAs, and HOAs make it so damn difficult to go ahead and get into a home that you want to stay, because the whole purpose of buying a home is for somebody to not tell you what to do whenever you bought said property. Now there's plus sides to have HOA, and then there's downsides to have HOA. The plus side is that if you had a homeowners association, you don't have to worry about, the streets, having broken, beat up cars, or like, parties going whenever. Those are the bad parts about it, or the good parts about it. And the bad part is that, you do have like a big brother that's always watching over you. But as a whole in California, we have dropped probably between 23 to 25% total on average year-to-date sales. Now the change in total prices is not as much as you would think. Now single family homes in June 2021, now this is as things were peaking, were 819,630 in single family homes. And then in June, it went to 863. In May, it was at 900,000. So you see how much it has just appreciated, and that is just as of June 2021. Now June 2020 was much more lower than that. The average was somewhere in the 7s, and then going pre-pandemic levels, the average was probably somewhere in the low 7s, high 6s. So do we count it based off of that, or we count it based off of this? Now, if we do have, let's say, a 20% hit, a 20% hit will just put us like, pre-pandemic levels. So is it really going to take that much of a hit? Now, coming here in the next month in September, the feds are going to hit us with another rate, but a rate increase, which is going to be the Fed fund rate. That's going to be the amount that each bank charges each other to go ahead and buy these and sell these. It's like buying and selling money, pretty much. That's pretty much what real estate is. Mortgaging is a way for you to have something that's tangible for them to go ahead and buy and sell money. Because if you had, let's say, a $800,000, $700,000 mortgage product, at the end of your amortization table on a 30-year fixed rate, you'll see how much you're going to be dumping into it. Now, the long-term effects of this is that, whenever you're buying and selling, majority of people, whenever you have a first-time home, you're going to go ahead and upgrade, or you're going to refinance, or you're going to do something. So this is a way to keep the ball rolling and keep money just coming in, and for them to go ahead and have some sort of income. Now, like I said, we have to look at every single one of these big markets: Canada market, American market, Chinese market, and see where they're going. Now, Canada has taken a 29% hit as far as year-to-date sales. Canada home, they dropped for the 5th straight month in a row. And here in California, we have dropped this is going to be the 11th month that we have dropped. Now the China market is one of the big ones. China market, now they have this thing where, they have this zero COVID policy that they have going on. So because of that zero COVID policy, a lot of these people are just protesting, not trying to give any money into the banks. They're like, we're not going to pay our mortgages because you guys are putting us between a rock and a hard place. If anybody has COVID, you're stuck at home. That means your savings is dwindling, your total income is going to be affected, everything is going to get affected. Now, majority of these real estate firms here in China, or not here in China, but over there in China, they're incentivizing buying homes, like crazy stuff, like, oh, I'm going to give you a pig for a 200-pound pig if you buy this home, or I'm going to buy you a car, or I'm going to do this and I'm going to do that. They're trying to do a bunch of things, but China Bank, they may face up to a $350 billion in losses, and because of the whole property not paying mortgages, and these asset management companies that they're just not producing anything because they don't have people that are trying to buy anything at all. Now, Canada is one of those other ones. United Kingdom is another one of them. United Kingdom, they took a small hit. Now that's mainly because they don't have as much newly developed homes as we do here in the United States. We're just going nuts. Especially we have D.R. Horton, which was one of the biggest ones. They think they had like a 29% decrease in sales. So all these big builders, they're pumping the brakes, especially because we're coming into the slow season. Now we're projected that we're going to find out exactly where we stand in the real estate market probably in the next March, April time, right before the busy season comes in. That's where we're really actually going to know where our numbers are, because a lot of these counties, especially here in California, we still have eviction moratoriums where you can't evict people. So a lot of private investors, small mom and pop, landlords, they're kind of getting dwindled out. They still can't evict people. People are just kind of taken advantage of the system as a whole. But for the first time, the UK has taken a 1.3% hit, and then in China, property sales has plunged over 30%. Now, but S&P, they say that this could possibly be worse than the 2008 crash that we had. Now, that's a bold statement coming from the S&P. Now, that's going to be your mortgage rate update. So if you want to go ahead and stay up to date with the real estate market and what's going on and how everything is panning out, go ahead and like, subscribe, comment. Until next video, guys, I really appreciate you watching. For up to 50% commission rebate, 0% listing on selling your home, or any mortgage assistance, link in the description below. Until next video, guys, I really appreciate you watching. Peace.